Just a quick update now in relation to what to look out for this coming week. That is the week commencing the 11th of January 2016. And you can see now it is at 4 to 6 on the 11th evening. So we've had a couple of hours of the American trading, and again we've had the European session, such as the FTSE and all closed. So you can see what's happening last week, and we had a very bearish weekly bar, and with that very bearish weekly bar, it means that we have a higher probability of last week's low being taken out to the downside this week. So it does. I was going to say firstly, but again, for the market to rally the 1,000 points or 1,100 or 1,200 points would be something else. Indeed, we could have traded probably within last week's range, but you can see as we speak, last week's low, I believe, has been taken out. And I can just confirm that there by putting on my data window. I'll bring my data window over, and last week's low had a low of 16,314, and today we had a low of 16,302. So we have achieved the price action, weekly price action objective. But do you think is it finished here? And this is what we want to look at. Again, just trading using the very basics of price action, and I just want to bring up the daily charts, and you can see just reading single vertical bars, which is a part of our very basic price action methodology, and you can see from the inside bar that was created here, and once it broke out of that inside bar to the downside, look, we've had 2 days of weakness. We had another inside bar, whatever direction it broke out of that, it broke out to the downside. What had we? That market has went 1, 2, 3. So very simplistic price action analysis and price action trading just of the daily bars, and you certainly would have picked up a trade from 17,600, and we're now at 16,300. So there's certainly there was certainly a fantastic opportunity. I appreciate that not always just an opportunity such as the one that has presented itself over this last week, as far as the major indexes are concerned, doesn't come that often. But again, you have to be prepared to take the opportunity when it does. But if we flick back to the weekly charts, because what we want to really do, obviously, from a trading perspective, it doesn't matter what way the market goes. But let's face it, from a investing perspective, obviously we want the market, we want shares to be good quality shares to be rising with a rising overall rising market. And what we have to look for in all chart analysis, and it's the same in this particular weekly chart, are we making higher lows, or are we making higher highs, or are we making lower lows and lower highs? And you can see here lower weekly lows, lower weekly highs, 15,370. That is the area that's key here in the Dow. So there's probably I'm not saying it's going to go straight down like it did last week, but certainly there's quite a bit of weakness still in this particular market, I believe, to the downside. Now, what I would like to do is, the oil market very much dictates what the indexes have been doing in relation to the overall sentiment and the economy, etc., etc. And again, we're trying to look now for clues within some of the correlating or non-correlating markets that are linked to each other, and that can maybe let us know what to look out for, to see can we find where there may be some buying pressure coming in to overpower the selling pressure that we're presently in. And what I'd like to look at here is what we call the dollar index. Now, the dollar index is a market that is very much linked. Obviously, as it rightly says, it is a dollar, but it is weighted, about 60% of its weighting is in relation to the dollar-euro, the euro-dollar. And it is also, the dollar index is also heavily linked to oil. And to further prove my point, if I bring up will I just change this? There is a weekly dollar rally that has went on from last May, June, July, August, the whole way up, and you can see what has happened to oil over the same period of time. Now this is a daily time frame, but we can change it to a weekly, and you can see there, hopefully if we get the two charts together, as the dollar index was rallying, you can see that oil was falling. So therefore they are non-correlating or correlating. In other words, if one goes up, the other is going down. And what we find with the dollar index is something that I would like to point out. What we do find with the dollar index is that it can be a leading indicator. And obviously if the dollar index goes up through this resistance, that obviously will further weaken the oil market, which will further weaken the indexes and the global stock markets throughout the world. But you can see last week we had a bearish weekly bar, and this is maybe key, because obviously you can see that if we come up here and make a bullish bar, we would probably have a confirmed higher vertical bar trading pattern low in place. And I know to the non-members that you do not know what that means, but obviously it's the same old adagio: higher highs and higher lows equate to upward moving markets, and lower lows and lower highs to downward moving markets. So therefore, if you have a higher low, vertical bar trading pattern low, we should make a higher high. But this market has attempted to do that. As we speak, it has not achieved that, and last week we had a bearish bar, and with the bearish bar, that may give some hope for the dollar index to come off a bit. Yes, that will it will rally the euro again, the dollar, but more importantly, what will happen, it should actually perhaps lead, if this were to happen, if we were to get further weakness in the dollar index, it perhaps would be a leading indicator in relation to a bottom being in place in oil. Now at this minute in time we cannot say that, because oil is just getting weaker and weaker and weaker, and it's down at $31.21, the light crude. This is the light crude futures, and indeed I had a fantastic trade in this earlier today, that I've been in from 33.44 right down there to about 31.20 or 30 there, so there was over $2,000 per contract that I was in myself. So again, what I keep saying is trade what we see, but certainly I will be keeping a tight eye on the dollar index to see, does it give me a lead in relation to where the crude oil market bottom may be in, or where it may be rather, and if we can find out where perhaps the crude oil bottom is going to be, that in turn might give us an indication that perhaps there could be some sort of a rally in the stock markets at this particular time as far as the indices go. Now, if we take a look at some of the currency markets, let's just take a look what is happening within the currency markets. And again, you can see that the pound has now come down to support. In fact, it's just broken through its previous support. Again, you can see where we've been drawing in the lower lows and lower highs here, and you can see with a weekly bullish bar here going back on the week ending the 11th of December. And once the market broke that low, without it breaking the high, that was a very, very sign for the pound dollar, the cable market. And we'd closed we'd closed the following week of 148.63, and of course today we went down and we made a low of 144.92. Now, lower highs has come back down and it's made lower lows. This is the last lower high, confirmed high, made a lower low. It's come back down to support here. The previous support was at 145.64. Now, what is key and what we'll be looking for is if we can get bullish bars or bullish daily bars off this support up through this previous level, this previous low, although that there low has now been broken and that is now resistance. If we can close up above that, that may indicate that the cable, the pound dollar market, that there could be some movement to the upside in that. And if we flick on to using our indicator in relation to the pound dollar, you can see that there has been a bit of blue in the 5 and the 15-minute chart. The 5 minute went into a bit of selling pressure, because obviously there was more selling pressure in that time frame, but that was not confirmed on the slightly larger time frame, the 15-minute chart. So it wasn't. So we're in a neutral, very much these time frames are on a neutral basis. And if we just click over and look at the hourly chart to see where we are with the hourly chart on both these, you can see that again the hourly chart is now neutral. Coming out of this, look at the sell signals that we've been given using our very good unique trend indicator. We've had a bit of neutrality in here. It's went red again, and we're back into neutral here. So let's take a look what's happening. When you see neutral coming into the market and maybe another bit of selling pressure, more neutral, that actually can be an indication if you're getting a couple of neutral periods within a particular time frame. That can be an indication that a market may be coming out of this, coming out of one trend to go into another. And again, this has been in the downtrend. So all in all, I would like to see it close above the previous resistance at 145.34, and then for the likes of the hour market and down into the 15 and 5 minute chart starting to give us the blue signals, that would be quite a good indication that there's perhaps a bottom in place. Now let's take a look at what the euro's been doing, the euro dollar. And the euro dollar in this instance, again, it has had a bullish bar last week, and today it has, as we speak, it has reversed quite significantly after being up quite well this morning actually. But again, it's quite significant because we also remember we're talking about the dollar index, and it showed weakness, and the weekly bar closed week lower and weaker last Friday. And we want to see, is that going to indicate that perhaps that the dollar is turning around, as I've already stated, for perhaps indicating that we could maybe get some buying pressure coming into oil, and which in turn would help the equity markets. But again, you can see what has happened now at 6 o'clock this evening UK time. We've had weakness in the dollar here, and that can only be further confirmed in our shorter time frame charts, because if you take a look at what has been happening here, you can see that our 15-minute chart has been red. It's yes, maybe starting to go perhaps green, and even our 5-minute chart as we speak has been red, and there's been a bit of blue, but this blue hasn't been confirmed by the greater the 15-minute, the greater time frame chart, the guidance chart, and therefore at this minute in time there's certainly more weakness within the US dollar 5-minute charts than there are buying pressure rather. So again, if we take a look at the 60-minute chart, and let's see what we can look out for in it, and you can see it's back into a neutral mode after trying to go up. But you can see there has been these spikes, and the neutral bias has come back into play on a couple of occasions, and we're back into this particular neutral bias as we speak. So this low here is key in the euro market, and that low is 108.02, and that is the low that we have to be very much aware of as far as the euro goes at this minute in time. Any close above 108.02, and perhaps it can continue on this upward move, bringing the dollar down, which in turn will bring crude oil up, which in turn help to bring the equity markets up. So I hope this makes a little bit of sense to you all. Again, for those of you that are not members and are listening to this short video, remember, if you want to get involved, learn our methodology, have access to a very unique indicator, it is beawinningtrader.com. Thank you very, very much.